Welcome to another market profiling video. Today we'll be talking about the auction framework and excess or the lack of excess for the market profile. Let's start the video with an explanation of what is the auction framework. So what is the purpose of the market? The purpose of the market is to facilitate trade, meaning that as the price moves up, it brings in more buying, or as the price moves down, it brings in more selling. The thing you need to know overall about the auction framework is that the market begins, moves directionally, and advertises for an opposite response to shut off this directional move. Basically, the market moves higher until there are no more buyers, then it reverses and moves down until there are no more sellers. The end of an up action is the beginning of a down action. Now let's talk with an example. Let's say the market moves up directionally, okay, we have an uptrend, and the up move brings in selling. Okay, we have sellers stepping in the market. The selling is an opposite response which, first of all, stops the up move, right, shuts off the buying, and second, causes the market to reverse to move down. The result is that the up auction ends and the down auction begins. Now let's say the market, moves up and advertises for selling but doesn't get any, okay? So you don't get sellers up here. The market keeps moving higher. Instead, it brings in more buying, okay? The buyers are in control. Therefore, the market has to move higher to bring in an opposite response. The result is the up auction continues. This is where you will often hear people that are using market profile saying that the auction hasn't ended. Okay, so when an auction hasn't ended and there is no excess, which we will talk about right now, it means that the up move hasn't finished and there's more room for the market to run to the upside. Now that we've explained the auction framework, let's talk a bit about what excess actually is. Excess, commonly referred to as buy or sell tails, highlight the end of one action and the beginning of another action. No excess, also known as poor high or low, is frequently a sign that the auction in that direction has not been completed or hasn't reached exhaustion. When you got more than one day without excess, the odds are increased of continuation follow-up. Looking at this as the market profile, you can see here the market profile as a composite, and if you open up the market profile like that, you can see here a lack of excess. Remember, the excess needs at least 2 ticks in order to count. As you can see here, the lows at the C period have at least 2 ticks below the B period. It means that this is excess for the market. Up here you have the A and M period overlapping and you have no excess. So the auction up here is not completed. So what does that tell us for the market structure? It means that this high right here is weak, and once it gets revisited, the odds favor that the market will find at least 2 TPOs of excess above this high. Okay, so when the market reaches this high, that's on the A and M period, the odds favor that you will at least get 2 TPOs of excess above. Also, many technical traders that use technical analysis such as double tops will see this area and will try to place their stops and try to short this, okay? They will try to short and they have their stop loss usually above this area. That means the moment the market pokes above this area, they have to close their positions, meaning that a lot of times, that we will also see on the next slide, we will have the market spiking higher the moment that you revisit this poor high. This could be also a poor high and a poor low down here, okay? So this can add context around our trading. And as you know, market profile is not a trading strategy. It's a support decision tool in order to add context around momentum. Now that we talk about excess and have some understanding of it, let's discuss how this plays out within the context of the auction framework. So once the market defines a range with excesses at each end, let's take a look at this example right here, this day. You have excess at the highs, okay, this is finished auction, and you have excess at the lows, okay, this is more than 2 TPOs to the downside in this example right here. Then it negotiates within that range to establish value. As you can see here, this is where the value area is, okay, so the market defined the low and defined the high right here. This is good excess on both ends. Then the market trades between those established excesses, okay, so the market conducts business inside this distribution area until it either trades above the high excess or below the low one. In this case, the following day we can see how the market moves lower and prints another excess low right here. And the value is overlapping right here as the market moves. Now you can look at the market at any point in time and you will see these three references: excess low, excess high, and value somewhere in between. These three price areas define the negotiation process, the method that the market uses to facilitate trade. Now let's see what happens when you don't have excess. Let's take a look at this example right here. Okay, let's start with this. You have an uptrend and you have no excess. It means that at the close of this day, which was right here, the day close right here, we knew, before the next day even opens, that we have unfinished business right here. Okay, so the expectation going towards this day right here was that the market was lacking access above. Okay, you don't have access right here. So this is unfinished auction. The next day, you have another unfinished auction with the market having more rows of TPO letters right here. Generally speaking, the more flat this area is, known as also as a ledge, the higher the odds that you will get revisited higher. And guess what the market did the following day? It continued to auction higher until it got excess. Okay, so this marked the end of the upside auction. Okay, then the downside auction began. And as you can see here, following these days, you have excess low here, excess low right here. Again, excess, excess. Right here, you have a poor low. So generally speaking, the poor structure of a poor low doesn't have to be revisited the following day. It's just simply an area that we expect the market at some point to return to, okay? So you have the following day moving on, and right here you see no excess on both ends. Guess what the next session does? It opens up, auction higher until there is excess, then moves lower until there is excess low, okay? So you have excess below here as well, at least 2 ticks. Then next session, same thing. Excess here, at least 2 TPOs, like we said, no excess to the upside. Poor high. Okay, moving on, guess what the next session does? Clears this poor high. So moving prior to this whole session starting, okay, so we say right here we have a poor high. So we add that to our context analysis. So we expect the market to at least move a bit higher. This means that we exercise caution with shorts at this area. That's what we do, okay? So the market moves higher, and guess what? No excess. What the market does next day, auctions higher until it finds sellers to print a proper excess right here. So you can return back everywhere, basically, and we will see this process happening over and over again, okay? This is a good example as well. You have no excess, you have a bit of excess, but this right here is an extremely weak area. Doesn't happen again, doesn't have to happen in the same day. guess what this next session right here did? It printed a good amount of excess higher. So when we're trading in this range right here, we knew that the upside action was not finished. We wanted to see a proper print of excess, and this was it in this case, okay? So if you want access to this exact Sierra suite that you are using every single day in order to perform market analysis using order flow and market profiling, be sure to check our website. We have advanced footprints, advanced market profiling, and of course a 70-page ebook course that you can take that explains an introduction of market profiles, order flow, and market auction. We also have a set of bonus items for one price fee. Thanks for watching.